So you've probably heard that silver is a super solid, safe investment, right? But is it really the stable, dependable asset that everybody thinks it is? Or is there a much wilder, more volatile story hiding just beneath the surface? Well, we're going to break down the numbers and find out.
Okay, let's kick things off with an idea that might sound kind of weird. What if I told you that investing in silver over the last decade and a half was basically like flipping a coin? Yeah, seriously. Heads, you made some money. Tails, you took a loss.
And that really gets to the heart of it, doesn't it? Is silver this reliable, safe haven we've all been told about? Or is its reputation built on a pattern that's way more unpredictable? We're going to let the hard data from the last 16 years do all the talking.
So we're not just looking at a snapshot in time. Nope. We're digging into a full 16-year period. This lets us cut through all that short-term market noise and see what the real long-term behavior of silver actually looks like.
So what did we find? Well, get this. In fully half of those 16 years, that's 8 different years, silver actually delivered negative returns. It lost money for investors. A 50-50 shot, just like that coin toss.
I mean, that 50-50 reality just completely flies in the face of the popular story, the safe haven myth. So it begs the question, why do so many of us automatically think of silver as this stable, steady thing?
You know the drill. The common wisdom is pretty simple. You buy silver because it's a tangible, safe asset that should, in theory, reliably go up in value and protect your money. But as we're starting to see, the data suggests this is maybe more of a hope than a hard reality.
But, as soon as you start peeling back the layers and look at the actual year-by-year data, that whole picture of a steady, calm asset just completely falls apart. The reality is, well, it's a lot more turbulent.
Just take a look at this. It's pretty eye-opening. Years with negative returns aren't some rare fluke. They are a regular event. And we're not talking about tiny little dips either. We have seen 4 separate years with double-digit losses just since 2010, including a really painful 20% drop back in 2014.
But hey, it's not all doom and gloom. The flip side is just as wild. The very same asset that dropped 20% also, in one absolutely spectacular year, delivered a jaw-dropping 163% gain. This incredible range just goes to show you that silver plays at the extremes. It's capable of these explosive rallies, but also some really sharp drops.
So what in the world is going on here? How can one thing be so all over the place? Well, the reason is that silver isn't just one thing. It has 2 very different personalities that are constantly pulling its price in opposite directions.
Think of it this way. On one hand, you've got silver, the classic precious metal. A store value that reacts to financial news, interest rates, what the dollar is doing. But on the other hand, it's a crucial industrial metal. It's essential for making everything from solar panels to electronics, and that makes its price super sensitive to global economic growth and industrial demand.
And don't think for a second that this industrial side is just a small piece of the puzzle. It's not. It's actually the main event. Around 58% of all global silver demand comes directly from industrial use. That means the health of the global economy has a massive say in where silver's price is headed. So you've got these 2 forces pulling on the price, and that creates this perfect storm for some serious volatility. When the economy feels shaky, investment demand might go up, but at the same time, industrial demand often goes down, yanking the price in 2 directions. And because the silver market is way smaller than the gold market, any sudden shift in buying or selling can cause these really dramatic price moves.
Okay, so we've waded through all this data. The ups, the downs, the reasons why. What does this all mean for you, the person actually thinking about investing?
All right, let's boil it all down. What do you really need to remember? First, expect volatility. It's just how silver behaves. Second, negative years are not weird. They're common. They happen about half the time. Third, you got to be ready for both huge gains and sharp cuts. It's a package deal. And finally, don't get fooled by one good or bad year. A single year's return never tells the whole story.
And that really leads us to the final and honestly the most important question you have to ask yourself. The right question isn't just will silver go up? The real question is, knowing that a sharp drop is just as likely as a major rally, can you emotionally handle a bad year? That is the true test for any silver investor.